Hi guys, why not hit that lovely like button and comment in the box below? It really does help with the YouTube algorithm and getting the video out to more people. While you're at it, why not hit that red subscribe button if you haven't already. And have a look at smashing that bell notification. You'll be notified when I upload a new video. Now, if you're looking for a free trading platform on which to trade your stocks and shares, why not check out the links in the description below. You'll get a free share worth up to £200 for signing up and depositing a small amount. There's links for Stake, Trading 212 and Freetrade. There's also links to other freebies, as well as videos you may have missed, and my Trading 212 pies, which I rebalance regularly. So why not check them out? Hi guys, welcome to the Savvy Money Show. Me, your host Sean.
Hello, and thank you everyone for joining us again today for our ongoing water tower research fireside chat series. Today we have Zach Bradford back. Been here with us a couple times. As a reminder, we initiated coverage of CleanSpark in October of last year. Today we're going to be talking about a couple different things. We're going to be talking about the recent quarter as well as some of the outlook for 2021 now. And as a reminder, this is available for archive viewing as well, and is accessible for all investors, both during live here and going forward. We do have a chat box down, a question box, I should say, down in the bottom left-hand corner. Feel free to submit your questions there. We'll take as many as we can as we get through the end of the fireside chat. And I'm going to go ahead and jump in then, Zach, and kind of start out with the thoughts and maybe a review of the recent quarter and some of the highlights.
Absolutely, sounds great. And first, thanks again, Sean, for having me on. Always good to be able to get together and also speak to the investor base. So we had a great quarter. It was another record-breaking quarter for CleanSpark. Revenues were up 130%. Year over year. We saw growth in all of our segments. I'll speak to two of those in particular. One was our energy segment, which is software based mostly. We saw a growth from about 900,000 last year to 1.2 million in that segment. It made up about 54% of our revenue. And then, of course, a big growth area was the Bitcoin mining. We saw about over 700,000 in revenue from that segment. It's important to note that we only had that segment active for 21 days from the acquisition. So we were very happy to see the results from there. And it was also very helpful in bringing our margins up. So our margin improvement was fairly substantial. We brought it up to about 41% in gross margin. All of that in the end resulted in an improvement on earnings per share of about 8 cents on a GAAP basis. And then on a non-GAAP basis, we adjusted that and our earnings per share actually improved 34 cents. So we're quite close to EBITDA profitability based on last quarter. And we have some high expectations that we're going to get to that profitability on an EBITDA basis in the current quarter. So really excited, had a good quarter. Happy to talk about anything specific you wanted to get to there. But it was great for us. We're really excited about the progress. We have a great team. We've staffed up. Our sales are up, and things are going really, really well.
Let's jump ahead then and maybe look to the outlook for 2021 and how you see things developing. Let's start with the software business. I know everybody's wants to get to what's going on the Bitcoin side, but let's talk about the core business first and what you're seeing on the software side of business for microgrids.
Absolutely. We are seeing the growth. We've mentioned before that we've seen our proposal backlog right now exceeds 25 million. Our contracted backlog in that segment is about 6 million. So, things are going very well. We're closing business And we actually expect that to accelerate fairly substantially over the coming months. A lot of commercial and industrial clients and customers, they delayed their decisions based upon, the vaccine rollout, and they're trying to time when everybody goes back to the office. So we kind of expect to see a wave crashing down of contracts signings over the next 6 months as things get a little bit more back to normal. Now, in addition to that, and something we're extremely excited about, is we have launched our residential initiatives. Now, we have done this for a while. We have been in the space, but how we have been in the residential space has usually been limited to estates. We sometimes refer it as, the mansion initiatives. So, these are generally, 10,000 square foot plus homes. They usually have outbuildings, and we have been providing our software to control energy systems throughout there. This latest initiative we've just announced, it's going to allow us to take the same technologies that were built for military and commercial use and bring them into the residential space in a much more affordable way, so that somebody that has a smaller home, we've really sized it out to 500 square feet and more, which is really an apartment or a condo. Plus, we can help them save money with our solutions. Now, this solution, we are going to begin taking pre-orders in about 45 days. And we're going to offer it in two platforms. One is going to be controls, where they can be paired with either existing or new assets. But also we, have plans that we'll announce more details on in the coming weeks. But it will be, a full solution, so that all of it will be an M-Volt product, including the batteries that will be included. We have some partnerships that we're really excited to talk about. They're still in development, so we'll hold on that. But right now, you look at what's happening in Texas. The latest headline I saw was there were still 40 megawatts of power that was offline. There's millions of people without power, and our solution, and frankly even competitor solutions, will enable those homeowners to still have power when situations like this happen. And I think situations like this are not going away, whether it's a hurricane, a winter storm, the wildfires in California, which is really one of our main focuses. This is a really important thing for us. And, we're making some strategic moves we're real excited about. And, our investors will definitely hear more about some things we're working on next week. So, everything's going very well on the energy segment.
Thanks. And yeah, clearly, microgrids and distributed energy resources are just continuing to see more and more focus, both in the nanogrid side of the residential and also larger microgrids. But, a number of the companies that are also supplying the space are seeing similar, pickups and interest, and also providing a comprehensive solution like you were referring to, not just supplying one piece, but coming in and doing an entire system and then managing that system or through software, for these customers. So very interesting stuff. Next, why don't we get back to the Bitcoin? I think everybody would like to hear how that's going, given the recent run in the price. But what's happening in mining as it relates to CleanSpark and kind of where things are today, and importantly, kind of where you're going, and given where Bitcoin has been, maybe the expansion strategy too, with the current prices.
Absolutely. We're extremely excited about the space. And one thing I want to start with is to recognize, the cost of Bitcoin mining is, almost 100% on the energy side. You have a little bit of overhead. You've obviously got to pay rent, things like that, or you got to, pay your mortgage for the buildings that the mining, happens in. But your cost of goods is energy. And that's what attracted us to the space, is we know we can make an impact on the energy side of this business. And so, we're really happy with how things have gone. When we acquired ATL, the company was doing about 200 petahashes in processing power. Now, what that means for the user is you participate in a mining pool, and the amount of data that gets processed, you get paid in Bitcoins for. That's all mining really is you're getting paid to process data. And so to put that in perspective, on day one, when we acquired the company, we were producing about 1.4 Bitcoins a day. Now that varies a little. There's difficulty rates and a variety of other factors. But obviously we have benefited substantially. It's been about 70 days since that acquisition, and Bitcoin's gone from the mid-teens all the way up to 50,000. I think we got our timing right is an understatement. And we have now added more processing power. So actually, my team is installing some of the last machines right now. In our most recent earnings update, we talked about getting to 315 petahashes this week, and we're doing that now. So the company's already processing more than it was before. So current rates, what that means, again, to translate it in, it's about 2.2 Bitcoins a day is what 315 petahashes gets you. But I want to speak about what we're working on for the future. At the current site we have in Atlanta, we are working on expanding the facility. We actually are adding a second data center next to the one that currently exists, and adding infrastructure. That infrastructure and energy is going to bring on an additional 30 megawatts of power. Now, we expect everything to be online, both the power, new miners, and we expect to reach about 1.3 exahashes or 1,300 petahashes by midsummer. And again, I'm going to translate that. That means with current difficulty rates, that'll be about 9 Bitcoins a day. We think difficulty is going to go up. There's obviously more miners like us bringing more data online. So, it'll probably vary somewhere between 6 and 9 Bitcoins a day. And we're extremely excited about that. If you were to annualize that, what that means is it's about $115 to $150 million a year in revenue. And at that site, we're able to, we have really low energy costs. We're doing it about 2.85 cents right now, and we're going to push that lower with our energy assets. That's our target. And we're mining at about an 89% profit right now. Now, you asked a really important question. That's what we've talked about already is our immediate growth plans. Those are things that we're already in process of doing. But I want to speak a little bit more forward looking, actually. And that is, we're actually right now working to identify additional sites, and we are in some later stage conversations to bring on additional sites with additional power. Some of these sites, we have some pretty high goals. We want to run some of these sites on 100% green energy. So already our sites are very clean. We're going to add renewables, and the power that we're purchasing right now is largely driven by nuclear power, which is considered a clean energy source. So pairing that with renewables in our Atlanta facility, we feel good about that. And then again, these new sites we're evaluating for deploying, clean energy. And each of these sites would allow us to add up to, it could be 10 megawatts here, 20 megawatts there. There's multiple sites we're looking at, but we absolutely plan to expand further than we've already talked about. But, we're working on those. Those will be things that we will announce in the coming months. But that we do want to let our shareholders know we are going to expand even further beyond the Atlanta facility.
Are you seeing competition heat up for those other assets? I mean, obviously, high Bitcoin prices makes it more profitable, bringing in more competition, more capital. Granted, you guys have an advantage in the expertise on the energy side and cost saving side, but is it getting rough out there with a lot of people looking at these? Or are you still finding this may be some undiscovered gems out there?
Let me put it this way. It's about who you know. And, we believe we've got really good contacts. The individuals that we have managing the Bitcoin mining segment for us, they have just a deep Rolodex in the space. They've been in the Bitcoin mining industry for over 8 years. And we really feel there's a lot of, gems out there. Specifically, we're relying on our expertise. We think that energy is going to be harder to get than anything else in the coming years, because you have to find not only available energy, it needs to be, affordable energy, but also, it needs to be in jurisdictions where they're actually excited about Bitcoin miners coming in and using that energy. Some places in certain states, they don't want Bitcoin miners there using their cheap energy, so they're penalizing them. So we're using our expertise on both sides. One is on the energy side, finding locations where there is available energy, and in jurisdictions where they're excited to have participants in the market there. But also it's about acquiring miners, and there's a little bit of an arms race is what you hear going on, and there absolutely is. But there is a very robust secondary market in addition to the manufacturer's market. We have access to both through our contacts, and we do feel good that we will be able to fill up these facilities with the mining equipment. So our main focus, though, and we think is the utmost importance, is getting energy to run the miners on, because, frankly, I think that there are mining companies out there that are going to have a whole lot of miners that they don't have anywhere to run them on. And, if they want to come run them at a CleanSpark facility, we'd love to have the conversation. But I also think that we'll be filled up with our own mining equipment. So.
Well, what have you found have been some of the surprises, maybe both positive and maybe some negative ones, as you've gone through this first time? And obviously the ability to cookie cut going forward, using what you learned will be important for expansion. But maybe highlight for us a couple of those that stand out.
It's been a great learning experience, for our team to get further involved in this. And I think the what it comes down to is, I think one thing that's always surprised me is that all the miners, Bitcoin miners and other types of, crypto miners out there, they know that energy is important. What has surprised me is how some of them have ignored it in the past, and now they're really paying attention. Now, one thing you have right now is Bitcoin prices are such that you can survive, to a degree. Your profitability will be lower on more expensive power. But difficulty rates are going to go up, because the easier it is to mine, the more miners are going to participate. Difficulty goes up, and it's going to balance. So over time, it will balance. It will cost more to mine, and the rewards will be lower. And we believe, anybody that has more than 5 cents a kilowatt power, it's likely an unsustainable model. If you can keep it below 5 cents per kilowatt, there's a lot of money to be made in Bitcoin mining. And we've actually had outreach from, several mining groups, both private and public, that have interest in, reducing their energy costs. So we're really excited about making an impact in the market, because it's something that can't be ignored. And I think everybody knows it. Some people have ignored it. And we're here to help when they come to that realization.
So let's talk a little bit about how you value this. I mean, I can look at the software business and I understand it, and I look at SaaS business, and you can value those conventional methodologies. How do you look at Bitcoin in comparison and baselining it with, say, like a marathon or a ride? How should investors approach this from the valuation perspective to find relative value? Who's expensive, who's cheap?
Absolutely. You kind of hit it on the head. Something I think, my opinion only, I think we're deeply undervalued. And I think you can actually look at key metrics, and, investors use key metrics on their own to come to their own conclusions. But how we look at it is it's about production. And it's not just about how many machines you acquired that you're going to be able to, put into use at the end of 2021. It's about what's in use right now, because, we believe through our contacts, we're always going to be able to find mining equipment. Prices are going to fluctuate up, they're going to fluctuate down, but the equipment will be there. And so, what we look at internally is actual production and then future production. And if you look, for example, I think Riot is a great company. So I kind of look to them a little bit as a gold standard. And, they just announced they reached 1 exahash. So 1,000 petahashes. Put that in perspective and their stock price. And then I look at us and we have about a third of what they have. But if you then compare our market caps, you're going to see, I think, where there's some value. That's a pretty specific example, but you can do the same thing with, whether it's Marathon or Riot or, half a dozen other companies. What's the actual production and what's the cost of production? That's going to be what they're producing. Investors need to look forward and say, hey, what are they going to produce in 6 months, 9 months, 12 months? That's very important. We agree, and that's why we're growing. And we have big plans to grow even further than what we've talked about from the 1.3 petahashes. So, but, it's all about production. It's all about cost. And then lastly, it's about, do they actually have available energy to put assets that they're acquiring into use? And I think, really just doing market cap comparisons, that's where you're going to find the value. And again, every investor needs to make their own decision. There's a lot of factors. You got to look at the balance sheet, who has debt, who doesn't, who has lots of cash, who doesn't, who has lots of Bitcoins in the balance sheet. Those are all factors. And each company out there is different and, deserves value for different reasons. But really looking forward on the creation of value, which is in the creation of revenue, we believe that the value is going to be found in production rates. And we're going to aggressively grow those production rates.
Sounds like a great project for us to take a look at the industry and kind of set up some relative valuation scale. Because I think this is new to so many investors, and ended up how we value them, what metrics you're going to use is a learning curve. So certainly an interesting topic that's worthy of some more discussion. That finishes my questions, Zach. I'd like to take some from the audience. We've got a lot of questions from participants today, and we've got a number of questions coming in on class action lawsuits. What's the status and update there? They're seeing this, these things flying around out there, and we should probably address it.
Absolutely. I'm happy to talk about it. First thing, our news feed, there's nothing we can do about it. It's kind of getting plastered right now. I just tell all investors to read the bottom where it says this is an attorney advertisement. The company is aware of the claims. We believe they're completely and utterly frivolous. Frankly, this comes with the territory of being a growing company. And so we'll of course defend it, but if you look at most class action claims of this type, they go nowhere. And then we expect the same to happen here. So again, these are attorney advertisements that are out there. The company hasn't even been served with anything. So although we're aware of a filing that occurred, so we'll handle it as we need to. It's really unfortunate in my mind. I guess that's the one thing to say, that it's, I don't know how it's legal that these attorneys do it, but hey, it is. So, we'll roll with the punches, and we're just not worried about it.
Great. Thank you for the explanation. Also some questions about insider transactions. Been seeing a number of questions about that, actually. Been seeing some activity there. So maybe address what happened there.
Absolutely. It just shows how bullish we are. If you look at the executive team, we all acquired stock. This wasn't stock that was just granted to the company. We all wrote checks to the company. So it was over, the exact number escapes me. It's between $250,000 and $300,000 between all of us. I myself wrote a $100,000 check to buy stock. We're extremely bullish about the company. None of those insiders sold. We're all buying. So very happy about our future, and I can comment further beyond that if you want.
So a number of questions coming in. I'm looking at Texas again, and you had mentioned that, but maybe if I can reframe the questions that we're getting and say, how would you have helped in that situation? This goes back to the basic premise of a microgrid or a nanogrid, but I think it's worthy of maybe explaining what would happen if you would have one of your systems, your upcoming systems on a house there versus what was going on in the grid, and compare and contrast maybe.
Absolutely. So basically what the system would have is it would have both generation sources. Let's just say it's solar panels on a roof is the generation source initially. It then has a battery that can function both to add resiliency and backup power to the home. In addition to that, the battery in a normal, Tuesday afternoon in the middle of the summer is actually reducing their energy bill, because it is helping them use that battery power when power is expensive, and it's storing power when it's cheap. In addition, you can link in a generator. So what would have happened when this winter storm came through is somebody that if they'd had a system like that installed, the neighborhood's power goes down. When that goes down, they're going to have backup power stored in that battery. Now, that battery, life may vary depending on the size of the battery they put in. It could have 4 hours, 6 hours, 10 hours, whatever it may be. And if the sun is shining and there's solar panels on the roof, it's going to recharge that battery. Now, let's just say it's real stormy for a couple days and there's not a lot of solar panel. So the battery, is depleted. Well, if you also had a backup generator, you could start it up, or the system could be told to start it up when needed and continue to provide power to the home. So the easiest way to think about it, you'd look out the windows, all your neighbors' houses would be dark and your lights would be on.
So I guess that begs the question of what would pricing be for something like this? I mean, is this going to be affordable for the average residential customer?
Absolutely. That's important to us to make it so that it is within reach of anybody. And, we'll get much more specific on pricing when we open it up for orders. But the easiest way to think about it is it'll depend on the size of your system. So the more square foot you have in the home, if you want to back up all of your power, you need a bigger system. If you have a smaller home, or maybe you just want to back up power for a portion of it because, you want to keep your refrigerator running, let's say. You want to be able to turn, certain things on and off. It just depends on how you size it. But, the entry point will be under $10,000 is our expectation. And then it can go up from there. What we'd really like to do, and we may or may not have this, fully positioned at launch, but we would want to do so within a few months after launch, but offer financing so that it can be something where, a homeowner can make a monthly payment for something. You don't have to just write a check, but absolutely, we want to make it within reach for everybody.
Next question is an interesting one. Could you make a business out of what you're learning in the Bitcoin mining side and provide that service to other Bitcoin miners in addition to owning the assets?
Absolutely. Consulting is something that we could absolutely do. We are already doing some advisory for, Bitcoin mining as we're trying to help really new users and people that have new ideas of launching into Bitcoin mining, think about their energy in advance. But absolutely, we'd love to put our team on the phone with other Bitcoin miners, talk energy, see how we can help. It is something that we're not presently focused on because we are focused on actually deploying systems. But as we grow, that's something that we anticipate there will be more demand for. And as there's more demand for this consulting, absolutely, we could make it a revenue stream.
coming up on the half hour here, but I would like to take a couple more questions. One is, what are you doing with the Bitcoins? Are you selling them right away? Are you converting them to cash, or are you holding them?
We are selling some of them and holding more than we're selling. So, we're really bullish on Bitcoin. We think it's just going to keep going up. It'll go up, it'll go down, but, we think the long-term trend is that it's absolutely going to go up. So we are holding more than we're selling, but we are selling a portion of it. So, if I was to look at the ratio right now, it's probably a 50-50 ratio. And that just allows us to, keep cash flowing well.
And the next one is about CapEx, and good question. I mean, when you look at the plans, and you talked a little bit about your expansion plans, but it all costs money. And just trying to get an idea, what you might spend, how you might spend it would be helpful.
Absolutely. So, infrastructure, of course, costs money. So, for example, we budgeted in, the new data center we're building next to the existing data center that's going to be Bitcoin mining specific. It's going to cost, anywhere from $1 million to $2 million. I don't want to get more specific than that, but that's kind of the range of what we believe it's going to fall into. And then, of course, we have to acquire all the equipment. Bitcoin mining, it's interesting. It kind of the secondary market, and also even the primary markets direct from manufacturers, it fluctuates quite a bit, almost like spot pricing for the equipment. And it makes sense. We're essentially buying money printing machines. And so it varies quite a bit, but, I'm going to play this one a little close to the vest in that I'm going to say, we have strategic relationships. We have things in the works, but yeah, the majority of what will need to be done is going to be, expansion of infrastructure on site and at new sites, and then really the acquisition of the mining equipment, which we feel really good about.
I mean, there has to be a calculated ROI to this, right? When you look at, what a facility's mining right now, right? You look at what you can do to increase capacity, you look at what you can do to reduce costs, right? And then you know what you have to pay for the acquisition. So I assume you guys have fairly good predictability in terms of lower risk, I guess, in terms of the acquisitions, because you know those variables and you have them in hand.
Absolutely. I'll just say this, when we look at everything, from a payback point of view, especially at current Bitcoin prices, even acquiring some of this stuff on the secondary market where it's a little more expensive. And basically our blend is we're getting an ROI in under, 6 to 9 months on everything that we're acquiring. So we feel really good about the infrastructure upgrades and everything that we're working on. So it's a really quick return on capital.
And I kind of have a couple questions coming in that expanding on this. Will all the acquisitions and CapEx be towards Bitcoin because it just has such a high return, or are you still active and looking, on the software side, which was kind of the messaging before?
We are looking at both is what I can say. So, so we're looking at both is the easy way to say it. Obviously I can't say too much on that. But we're excited. Everything we're doing, really has a real, that we're working on from an acquisition point of view has a very strong, ROI to our shareholders. And if it didn't, we wouldn't, consider it. So we're still growing both parts of both segments of the business very actively and very rapidly. So some of that's going to come through M&A.
Great. Thank you, Zach. And I apologize. We have a number of questions. We're just running out of time, so we couldn't get to everybody today, but I'll turn it over to you, Zach, for any closing remarks you have, and we'll end today's fireside chat.
I just want to thank you for hosting, of course, and then obviously all the investors and shareholders for tuning in. We're really excited about our future. You can find more information at cleanspark.com. We trade also, of course, on NASDAQ under CLSK. And also feel free to reach out to our investor relations. That's IR@cleanspark.com. Our executive chairman is there to receive questions. We take it very seriously. Any interactions with the shareholders, we want people to be heard and love to interact with them. So we look forward to hearing from each and every one of you.
I always like these fireside chats. It all seems pretty good. I'm sorry if the audio was a little bit sketchy, but I tried to clean it up. Hope you enjoyed it as much as me. It does look good. They've had an amazing year, and it's good to know they're not standing still or resting on their laurels. It's good to know they're looking forward, and that the next year looks to be even better. Hopefully you'll give me a like and a subscribe. It really does help with the YouTube algorithm. And comment in the box below if you don't mind. I'll see you in the next video.